Hello and welcome to our video presentation. Today we're diving deep into the world of JB Hi-Fi, exploring its shareholders, competitors, financial landscape and share price movements. Our aim is to make informed future projections and recommendations, answering the key question, is JB Hi-Fi a worthy investment? But before we jump into the analysis, let me introduce the team behind this comprehensive study. We have Harry first as our financial accountant, Lachlan, our research analyst, James, our creative storyteller, that's me, and finally Matt, our project manager. Together, we are SJLM Solutions. Through numerous meetings and efficient task allocation, we've synergized our skills and expertise to unravel the complexities surrounding JB Hi-Fi. Now, without further ado, let me pass the virtual mic to Harry, who will provide you with some valuable insight into some background about JB Hi-Fi.
JB Hi-Fi, founded in 1974, is a prominent Australian retailer in consumer electronics, home entertainment, and home appliances. It has grown into a successful and well-known brand with a vast network of stores. In 2003, it went public on the Australian Stock Exchange, now valued at $4.93 billion. JB Hi-Fi's business model focuses on competitive pricing and a wide product range, serving diverse consumer technology needs. In 2016, they acquired The Good Guys, expanding their market presence and product offerings, particularly in home appliances. They've also established a strong online presence to adapt to e-commerce trends. Despite challenges like retail changes and the COVID-19 pandemic, JB Hi-Fi remains a robust player in Australia's retail sector.
Transitioning to our SWOT analysis, we've conducted a concise evaluation of JB Hi-Fi's current landscape. Strengths include a diversified product range, high inventory turnover, and a strong track record in product innovation and leadership. On the flip side, JB Hi-Fi grapples with challenges such as the emergence of new entrants, market share loss, and an over-reliance on outsourced brands. To address these challenges, JB Hi-Fi should strategically leverage new consumer trends to expand its market's presence. Additionally, the company should utilize its stable free cash flow for investments, particularly in e-commerce and entry into new markets. It is imperative for JB Hi-Fi to remain vigilant regarding the varied liability laws across countries, tackle issues related to inconsistent innovation, and also navigate through sale fluctuations effectively. Moving on to a detailed examination of JB Hi-Fi's stakeholders, let's delve into the key players shaping the company's trajectory. Among the primary stakeholders, customers play a pivotal role, driving demand and influencing purchasing trends. Their satisfaction directly impacts brand loyalty and market positioning. Additionally, employees are integral stakeholders contributing to the company's operational efficiency and overall success. JB Hi-Fi places emphasis on fostering a positive work environment to ensure employees' engagement and satisfaction. Now, turning our attention to stakeholders, the ownership landscape provides valuable insights. Investment advisors emerge as significant stakeholders, commanding a notable 32.74% ownership stake in JB Hi-Fi. Notably, Australia Super stands out as a major shareholder, holding 14.59% of the company. However, it's noteworthy that Australia Super recently reduced its position by 6,417,000 shares. This move could be a signal in a nuanced shift in confidence or a strategic adjustment in their investment approach. Understanding the dynamics of both stakeholders and shareholders is crucial for JB Hi-Fi as it navigates its path forward, aligning its strategies with the expectations and interests of these entities.
On this slide, we delve into the major stakeholders of JB Hi-Fi and examine their ownership stakes and recent position changes as of July 2023. These are 3 of the 5 major JB Hi-Fi stakeholders listed on FactSet. CPU Share Plans Proprietary Limited comes in at number 1, holding a 0.31% ownership stake in JB Hi-Fi, equivalent to a position of 335,000 shares. In a recent shift, their position increased by 44,000 shares, signalling a growing confidence in the company. The second stakeholder, Third Wave Investors Limited, possesses a 0.23% ownership stake in JB Hi-Fi, representing a position of 250,000 shares. Notably, there has been no recent change in their position, and despite their smaller ownership stake, JB Hi-Fi holds significance in their portfolio, comprising 30% of it. Lastly, SCC ASP Holdings Proprietary Limited maintains a 0.16% ownership stake in JB Hi-Fi, with a position of 175,000 shares. Similar to Third Wave Investors, there has been no recent position change. However, JB Hi-Fi holds a substantial importance in their portfolio, accounting for 41.96%. In summary, some stakeholders, such as CPU Share Plans, have demonstrated increased interest, while others have maintained their positions. The significance of these holdings in relation to the overall portfolios that they have suggests varying levels of commitment to JB Hi-Fi.
The first competitor of JB Hi-Fi is Best Buy Co., an American multinational consumer electronics retailer. It has a significantly larger market cap and enterprise value than JB Hi-Fi, at a market cap of Australian dollars 22,620.9 million and an enterprise value of 21,810.7 million. Its current price is AUD 102.09, which is relatively high and a possible sign of investor confidence and expectations of future performance. If we look at its ratios, the EV/EBITDA multiple of 5.52x suggests that the share is trading at a reasonable valuation when considering its earnings before interest, taxes, depreciation, and amortization. The multiple is lower than JB Hi-Fi's, indicating that Best Buy may be relatively undervalued in comparison. Secondly, the EV/EBIT multiple of 8.53x suggests a reasonable valuation, being slightly higher than JB Hi-Fi's, indicating that the market values Best Buy's earnings at a premium compared to JB Hi-Fi. The second competitor is GameStop, a well-known video game and consumer electronics retailer. It has a moderate market cap of AUD 6,614.2 million and an enterprise value of 4,885 million, with the market cap being slightly higher than JB Hi-Fi and the enterprise value being slightly lower. The stock price is relatively low at AUD 21.24, indicating the volatility of the video game industry it is within. Its lack of specific EV/EBITDA and EV/EBIT indicates a possible lack of profitability and with negative multiples. The stock price may reflect these investor concerns about the company's business models and industry dynamics. Yamada Denki Co. of Yamada Holding is one of the largest consumer electronics retail chains in Japan. It has a relatively lower market cap compared to JB Hi-Fi at AUD 3,728.8 million. However, its higher enterprise value of AUD 6,972.8 million suggests it may house a significant amount of debt or liabilities compared to its market capitalization. Yamada has a low price of AUD 4.43, but its multiples suggest that the price is at a premium and there could be significant growth potential. JB Hi-Fi operates in two sectors, the consumer electronic retail industry and the general electronics retail industry. It operates in three business segments, JB Hi-Fi Australia, The Good Guys, and JB Hi-Fi New Zealand, and two geographic segments, Australia and New Zealand. In the financial year ending the 30th of June 2023, JB Hi-Fi made $9,626.4 million in sales, a 4.3% growth from 2022, while spending AUD $7,443.9 million in cost of goods sold, setting their gross profit at around $2,182.5 million, the highest that it has been in its company's history, demonstrating the influx of consumer electronics demand since the COVID-19 pandemic, as profits have steadily increased from 2020. However, the company generated a net profit after tax of $524.6 million, a 3.7% reduction since 2022. However, this was 110% more than the pre-COVID financial year of 2019. 70.78% of sales came from products defined within the consumer electronics retail industry, such as televisions, audio equipment, computers, fitness, health and wellbeing products, smart home products, and cameras. And 29.22% of sales came from products defined as general electronics retail. With this growth comes many expenses. Expenses have steadily grown in line with the gross profit, with sales and marketing expenses coming at AUD 978.3 million, almost $100 million higher than the financial year of 2022 of $881.1 million. Occupancy expenses have also increased in 2023 after a lull in the financial year of 2022 and financial year of 2021 due to the pandemic and the company's shift to e-commerce and online orders. Administration and other expenses amount to $116.6 million, bringing profit before tax to $747.1 million, and an after-tax net profit of $524.6 million.
JB Hi-Fi has a capital structure with a strong equity base and sustainable long-term debt. They have 109.3 million basic shares, valued at around $4.93 billion in market capitalization. Their debt strategy is conservative, with no short-term debt and $49.8 million in long-term debt, demonstrating financial stability, especially in high interest rate periods. Their enterprise value is at $4,846.5 million, smaller than Best Buy, but significant in their market segment. Profitability metrics are strong, with high margins and returns on equity and assets, showcasing effective cost management and prudent capital allocation. In the past 5 years, JB Hi-Fi has reduced its debt-to-equity ratio from 49.6% to 3.5% and has ample EBIT coverage for interest payments at 29.2x. Dividends have been somewhat volatile, but show a growth trend over the last decade, reflecting the company's commitment to shareholders. Overall, JB Hi-Fi's financial health, efficient resource management, and strong profitability position it well for sustained success and increased shareholder value, even in a challenging financial environment with high debt servicing costs and cost inflation.
Thanks, Harry. Now I'll be delving into analysis of JB Hi-Fi's assets and liabilities. Let's start with the current asset structure. Now, the decrease in cash and short-term investments from $263.2 million in 2020 to $177.3 million in 2023 can be attributed to strategic decisions made during the pandemic. JB Hi-Fi was likely adapting its financial strategy to navigate the challenges. The management of short-term receivables, currently at $146.5 million, has been commendable. Notably, the substantial increase from $102.8 million in 2020 to $220.3 million in 2021 reflects a proactive approach in managing cash flow during the pandemic. The decline in inventories from $938.8 million in 2020 to $739.3 million in 2021 indicates the company's effort to manage stock levels amid economic uncertainties. However, the subsequent increase in 2023 to $1,040.9 million suggests a strategic decision to rebuild inventory, possibly in anticipation of improved market conditions. Moving on to the current liability structure, short-term debt and the current portion of long-term debt totaling $174.1 million highlights the company's need for short-term financing, likely related to working capital management. Fluctuations in accounts payable ranging from $607.3 million in 2020 to $581.6 million in 2023 indicate adjustments in payment terms, with suppliers possibly influenced by supply chain disruptions during the pandemic. Income tax payable standing at $4.3 million is relatively low, showcasing effective tax planning and management. The increase in long-term debt from $464 million in 2020 to $577.6 million in 2021 suggests strategic borrowing, potentially for operational needs or capitalizing on growth opportunities during the pandemic. The subsequent decrease in 2023 to $481 million may indicate successful debt management or repayment. Now let's delve into the equity side of JB Hi-Fi. Fluctuations in common equity from $1,308.4 million in 2020 to $1,105.7 million in 2021 may be linked to the pandemic's impact on financial performance. However, the increase in 2023 to $1,419.6 million suggests a recovery or strategic initiatives. Changes in book value per share align with fluctuations in common equity. This increase from $9.62 in 2021 to $12.98 in 2023 suggests a positive shift in the company's financial position, possibly driven by improved profitability or strategic initiatives. In summary, JB Hi-Fi's financial metrics underwent strategic adjustments during the COVID-19 pandemic, showcasing the company's adaptive response to economic challenges. The shifts in liquidity, assets, liabilities, and equity suggest a dynamic approach to financial management, emphasizing resilience and strategic positioning. Now over to Lachlan to touch on the financial instruments.
Now, turning our attention to a specific financial instrument, we've chosen to explore the renounceable entitlement offer amongst the options available. In this arrangement, existing shareholders are given the right to sell their entitlements, which can be a powerful tool for financial maneuvering. In the case of JB Hi-Fi, this mechanism involves the issuance of additional shares at a discounted rate, effectively allowing shareholders to acquire more shares at a favorable price. This process not only infuses capital into the company, with JB Hi-Fi raising approximately $394 million in the process, but it also introduces additional shares into the market. The primary purpose of this capital injection in JB Hi-Fi scenario is to partially fund the acquisition of the good guys for a cash consideration of $870 million. One distinct advantage I can explore is of opting for a renounceable entitlement offer over other derivative instruments is the ability to involve existing shareholders in the capital raising process. This approach fosters a sense of inclusivity and loyalty amongst current investors, leveraging their commitment to the company's growth. In scrutinizing JB Hi-Fi's market valuation, we've employed two primary metrics: market capitalization and enterprise value. Calculating the market cap by multiplying the stock price of $45.21 by outstanding shares of around 333,981 yields approximately a value of $4.94 billion. On the other hand, by employing the enterprise value method, which considers debt and cash, the determined figure stands at $4.8465 billion, reflecting a more nuanced financial picture. Further analysis of the essential financial metrics provides an in-depth insights. The price-to-earnings ratio, both current and forward-looking, is noticeably low at 9.7, indicating potential value. The price-to-book value ratio of 3.6 signals investor confidence in the intrinsic value of the company's assets. With a price-to-cash flow ratio of 7.1, there is evident trust in JB Hi-Fi's ability to generate cash from its fundamental operations. The price-to-sales ratio of 0.5 may suggest either undervaluation or a reflection of a lower profit margin. Lastly, the EV to EBITDA ratio of 4.7 implies potential value. Well, what about these figures? These figures, reflecting the most updated data of October 2023, provides a very comprehensive snapshot of JB Hi-Fi's current market standing. The company appears to be relatively valued considering calculated metrics, presenting an encouraged perspective for potential investors looking to align with their fundamentally sound and potentially lucrative entity.
Let's now dive into the world of JB Hi-Fi's share price throughout 2023. This year, the share price remained remarkably stable, oscillating between the $40 and the $49 price range. We have chronicled the various fluctuations in the share price in our graphic over here. However, for the purposes of this video presentation, we will only focus on a few key shifts. On January 18, 2023, JB Hi-Fi's share price increased by 3.43% after the release of its first half preliminary earnings, surpassing estimates across all segments. This surge was attributed to robust sales, improved product availability, and increased demand post-COVID-19, as noted by analysts from Morgans and JP Morgan. However, JB Hi-Fi's announcement of a moderation in sales growth a month later triggered a decline in the stock value by 4.55%, despite revenue and EBIT meeting expectations. Financial institutions' upgrades and downgrades also impacted the stock, reflecting analyses of financial health, market conditions, and industry trends. On the 10th of March 2023, the payment of dividends actually led to a share price decrease, as the total number of shares in circulation increased without altering the company's overall worth, diluting the book value per ordinary share. On the 13th of August 2023, the Sustainability Report release boosted the stock price as the focus on environmental and social governance resonated with investors. On the 14th of August 2023, JB Hi-Fi had their earnings release, causing the share price to increase by 2.23% following the announcement. JB Hi-Fi reported an earnings per share of $4.90, surpassing the consensus estimate of $4.64. Profitability also exceeded expectations by 3.41%. However, concerns do loom on the horizon. Barrenjoey analysts, they foresee future sales deterioration, and CLSA analysts painted a challenging second half, citing margin pressure due to factors like wage increases, rising rent, and some energy costs increasing. Nevertheless, the overall outlook remains predominantly positive. Now, let's move on, zoom out, and consider the broader economic landscape that has influenced JB Hi-Fi's share price for the past few years. In the tumultuous months of March to April 2020, the share price took a massive nosedive, witnessing a staggering 50% drop. However, in March of 2021, the stock witnessed a phoenix-like rise, soaring to $54.64. This was catalyzed by lockdowns and social distancing measures, which bolstered the e-commerce landscape, as demand for electronics and home entertainment increased. However, the share price has fallen noticeably from its peak, down close to 20% from March 2022. This may be due to the hawkish monetary policy stance adopted by the RBA, increasing the cash rate to a high of 4.35% in order to quell inflation. Such interest rate hikes and the burgeoning cost of living crisis may potentially lead to further drops in the stock price. The October crisis in the Middle East has also contributed to this recent decline.
JB Hi-Fi is well positioned for its stock to outperform the current market price in 12 months, driven by its strategic inventory and cost management, diverse product range, and investments in e-commerce and global markets that faces macroeconomic tail risks like high interest rates or a potential in bear markets for equities. The company's inventory and cost management are key profit drivers. JB Hi-Fi's inventory to sales ratio is at a 10-year low, reflecting strategic inventory control and purchasing. This tight management protects gross margin, aided by supply discounts to boost sales and increase competitiveness. Furthermore, workforce optimization with 30% casual employees and rostering based on sale forecasts enhances cost efficiency. JB Hi-Fi's strong net cash position, increased by 93% to $127.5 million, highlights its prudent financial management, providing stability and enabling capital investments in a high interest rate environment. Furthermore, JB Hi-Fi's diverse product range and shopping center presence give it a competitive advantage. Its electronic sector dominance supports remote work and technology trends, stabilizing post-COVID earnings. The Goodwire's acquisition in 2016 diversified its product sectors, growing market share everywhere, especially in home appliances. Restructuring its commercial operations to align with consumer preferences and market demands further strengthens its retail position as well. In terms of CapEx, JB Hi-Fi's new store rollouts in New Zealand and high-growth areas signal growth ambitions. Its 2023 return on invested capital of 59.5% shows efficient capital allocation and attractive investment returns. The company's online sales expansion and partnerships, like with Uber for same-day deliveries, adapt to consumer behavior and digital retail trends. A 52.8% sales increase online minimizes risk from online competitors as well. These investments position JB Hi-Fi well for e-commerce and new market share capture, boosting revenue and shareholder value. There are two potential tail risks that could impact the bullish thesis for JB Hi-Fi stock. Firstly, persistently high interest rates may dampen consumer spending, impacting sales. This is also tied to JB Hi-Fi's and the Good Guys store costs, which are linked to CPI, influencing rent and wages. However, this risk is unlikely due to decreasing inflation and large fiscal deficit servicing costs, with forecasts from JP Morgan signaling cuts throughout 2024. Secondly, a bear market in equities could negatively affect JB Hi-Fi stock due to its 0.8 beta, indicating a strong market correlation. Factors like reduced liquidity, poor earnings, regional bank collapses, and geopolitical tensions could drive investors towards safer assets. However, this scenario also seems less likely due to growing currency debasement and further interest rate boosting growth. Ultimately, JB Hi-Fi's combination of strategic financial management, adaptability to changes in consumer preferences and diversity, and investments in growth areas position it well for future success. These factors, along with its solid profitability metrics and strong balance sheet, suggest that the company's stock has the potential to grow in the next year, although it may face challenges in the face of continuing high interest rates or a bearish equity market.